and welcome to Taking Stock. This time around, we've decided to move out of our studios and we've come to the Traders Carnival. Yes, it's the very same Traders Carnival that was held in Bangkok last year. And this time around, it is in Mumbai. And, bigger, better, lots more traders here. Anuj, it's a great time because the market is also so charged up.
Oh, yes. And you know what? Last year in Traders Carnival, my special guest was Samir Arora. And you know what? He's flying down to Bombay, especially for Traders Carnival, and it will be interesting to get his thoughts going. But I take your point. I think the market really has been just moving one way up. And there's still so many skeptics in the market. One day they'll be proven right, but you don't know whether they'll be proven right after the Nifty goes to 10,000 and then it corrects, whether it goes, before it goes to 10,500. As of now, if you're a trader, you respect the ticker. But as you said, we are here at Traders Carnival, so let's invite our special guest Samir Arora. In fact, just here from Singapore, Samir.
Yeah, because I enjoyed it last time. I love to give free lectures to the world, so this time the lecture will be even more interesting, hopefully, than last time.
So what's your lecture on this time?
This time it is read everything, question everything, because one of my slides says that the market, particularly the Indian market, is like Bizenvik. What you see is not what you get.
Okay. And you know what, Samir, it's special because, I did Traders Carnival last year in Bangkok. I did a special show with you. You spoke about one book which fascinated me, on the robots, and you have gifted me that book. So thanks a lot for that, first of all. But Samir,
I've deliberately gifted it after 1 year so that I can enjoy the shorts in tech for this 1 year on my own.
Okay. But Samir, is this, they say when it's too good to be true, it is. How are you looking at the market right now? Because it's been a one-way rally for the market, for the Nifty of course, but for the Bank Nifty, it's been just stupendous the way it's rallied.
See, I think that the market, if I look at it, whether it is like bubble, I think it is not. But is it very high? It is. Why I say that is because in a bubble, if you see 99 or 2007 kind or 2007 end kind, then there have been 3 or 4 years of massive rallies in the market. Here, this not been that case. So that's one justification. But on the other hand, I think that the quality of the local money, although we have always welcomed it, I think is lower than FII money in the sense that this money is going into with people who I assume big picture are basically buying mid-caps and small-cap stocks. And mid-cap and small-cap stocks, particularly in India, everybody likes stocks which have no liquidity. Actually, all the MNC types, all the, are by definition low float, or they have moat, and they have God knows what, nothing except that they don't have float. So if more and more money goes into the same stocks, one day it will be ending badly for that money, for sure. And we also have some of those stocks. So in some sense, it should be a little bit more measured. I like rallies and strong rallies, but I always worry what will my investor do next month and the following month. A new guy who just met me and says he wants to invest, how will I get him some return? So that way it is better to have slightly more steady returns than this kind, but so far so good that way.
Actually, you spoke about the new guy. That's interesting because there are many new investors entering into this market now. When your house help and your drivers start asking you about mutual funds, that's when you start to get a bit cautious. You think this time is going to be different and the market won't top out?
My house help's son in Delhi owns HDFC Bank, which I told him to buy many months ago. But then a few days ago, when I was in Delhi 2 weeks ago, he asked me, what do you think of RBL Bank? So actually, it is true. It is true.
You should start to get a bit skeptical. But are you skeptical about
even on RBL Bank? So I said, but don't buy it right now. But in general, I agree a little bit that it has gone to that stage. And so, we only feel happy that we are always 30-35% short, for which we have paid a lot of cost in January, particularly more than in Feb, March, and maybe a little bit today. But we think that we say, when we in our office, that this is that we have put this money in a piggy bank, and it will all come back to us when the market's correct. So that is how we survive the shorts. But otherwise, it is but also if you look at big picture, in the last 10-12 years, if you look at the number of months in which the Indian market has fallen 8% or more, it is around 27-28 times in dollar terms. So a little bit in that month will also be added by the fact in that month that the rupee will weaken, let's say. But it's happened like 2-3 times a year on average. The average gets higher because in 8 there were many more months. But otherwise also about 1.5 months every year the market will fall. And after 1 month you won't remember why it fell that much. So those things will happen, and then some of these things that we have stored away in our piggy bank will come back on the short side. But otherwise, yeah, it's okay so far.
You know, that was my next question, Samir, because, you know, for a FI investor like you, it's been great here because the rupee has also rallied so much. Dollar terms, the broader market is up, what, some 25% this year?
No, the broader market means if I look at MSCI India, it's around 19.5% till today.
In dollar terms?
Yeah, in dollar terms.
But that's a lot of return, right?
Yeah.
But we're still not getting the kind of money flows that, you know, we thought. You know, there was a period when it looked like the ETF flows are back. All of a sudden, that's
but you know,
evaporated.
First thing is, because it's too fast also, but if I look at it, how I justify to myself more than to anybody else, that last year the MSCI India was down 3 or 4%. And the year before, it was, I think, up or down some 3-4%. And then in 14, it was up a little bit more, 30-40%. So actually, the market, if you look at it from November 1, it's not up a lot. It's just that I think that the reward that is given to somebody doing what your tweet was, that, oh, I've done a little better, therefore the stock has to go up. Yeah. That kind of thing is what bugs me. Because one of my another slides is that a difference is a difference, only if it makes a difference. So if you say some heavily indebted company has sold off its head office, let's say, for example, who cares? Because he will still be very indebted, even after this thing happens. So those kind of things, I feel from a distance that somebody's getting carried away, and it'll hurt us also, even if we are not getting carried away along with that guy.
But you know, all this while, we didn't see any signs of green shoots. Now, I'm not saying there are green shoots right now, but at least we're not seeing as bad numbers. Say ACC, for example, there's volume growth. Kotak Mahindra Bank is doing relatively better. Axis Bank has reported lesser number of slippages. Is that a positive sign?
We are taking all the positives. That's how we are also going along for the full ride, and haven't added. Haven't added to shorts. It's not that we are saying, oh, now is the time to. No, we are also going along for it. It's just that the pace is a bit unnerving. But as I said, if maybe the guys will look at it from a slightly longer first. Second is new money. The new money may be following performance, chasing performance, but it is money for the moment, and they have less choices. But I think the biggest thing you can take away for being positive is, you know, actually the market in dollar terms or even in rupee terms hasn't done anything for the last 4-5 years. So, actually it hasn't done anything.
Samir, again, it's a market in which you have to participate, right? Where are you adding longs, and are you adding any shorts anywhere? Or are you more than 100% long now?
No. We are never 100. Even in 14, our highest net would have been about 85. Okay. Now we are 70, 100 long, 30 short.
Okay.
And that we won't give up. We may change a few shorts here or there because of discounts on the roll and this and that. But broadly, they will remain because, as I said, we have seen it. It comes back and gives you more or less all of it back. And in those months, you feel much better when everything is down. But even now, because our longs, as you know, are all doing well because of being in financials and NBFCs and all that, and not being in microfinance for a long time, which again had pathetic results yesterday or today. So broadly speaking, it's worked out, but we will not cover our shorts so easily.
So, we were speaking to a couple of traders who are going to be showcasing their presentations at the Carnival. And one guy was telling us that the bank Nifty is something that he trades frequently, and he expects to see a lot more upside there. You spoke about financials. What's happening there? Because there is no real evidence of any NPA resolution.
You had an interview I saw with Mr. Aditya Puri saying the best is yet to come.
Well, for some of those banks, they're in a league of their own. I'm saying about
why are they in a
PSU
league of their own? As part of my presentation tomorrow, why are they in the league of? We have been told again and again, you should know something more about the stock than the other guy. We had this billionaire come from wherever US and said, my son is told and asked, what is it that you know that nobody else knows? Tell me, what does anybody know more in HDFC Bank than the next guy? But he's made like us 700 times without knowing anything more. So all these things are just lies. It's not a league of its own. The point is, every day somebody sells it. In fact, look at our guys. When the FIIs were allowed to buy $1.5 billion because the stock went up 5% that day, some Indian fund managers sold $1.5 billion. Why? Knowing that they will get money. And maybe for a few days you could have corrected. But could they have all bought it together, $1.5 billion? They couldn't, and they haven't. So they go and buy more mid-caps, increasing their own risk in that sense.
Oh, yes. I remember, Samir, you were telling us in one of your presentations that no stock has made more money in dollar terms than HDFC Bank. In last
No, overall it may have been good. I didn't, possible, but I'm just saying that in terms of the obviousness of the story, the story doesn't have to be not obvious to make money, which is what many people say.
Oh, yes.
That if nobody should know about it, you should have discovered it. Okay, when you discovered it, but for the last 10 years, if somebody doesn't have it now, even as I said in my house,
No, my question was more on PSU Bank, but I'll do that in a bit. I'll just take a short break because we have to do that. Let's take a short break, but don't go anywhere. When we come back, we'll resume our conversation with Samir Arora.